If you are a US citizen or green card holder living in Australia, your superannuation is one of the most important US tax reporting issues you should not ignore. If you are assuming that the IRS does not care because it's just your Australian retirement account, that assumption can be risky. If you are or were employed by an Australian entity, you will have a superannuation account. For Australians, superannuation is part of the retirement system, but for US tax purposes, it may not be treated the same way as 401k or IRA. That means a US person in Australia may need to review their superannuation for US income tax reporting, FBAR, Form 8938, and sometimes foreign trust or other foreign asset reporting questions. This issue matters if you are a US citizen, green card holder, dual US Australian citizen, or accidental American living in Australia. It also matters if you have an Australian super fund from a prior job, an industry fund, retail fund, defined benefit interest, or especially if you are involved in a self-managed super fund. Reporting Area 1 in relation to FBAR. For US persons, FBAR may apply where the total value of foreign financial accounts exceed 10,000 US dollars at any time during the calendar year. Many US tax professionals treat Australian superannuation as something that should be reviewed for FBAR reporting, especially where the member has a financial interest in the account. Because superannuation treatment can be fact-specific, don't simply assume it is outside FBAR. Review it with your other foreign accounts. Reporting Area 2, Form 8938 Specified Foreign Financial Assets. Form 8938 is used to report specified foreign financial assets if the total value of those assets exceeds the applicable reporting threshold. For US citizens living in Australia, superannuation may need to be considered when reviewing whether Form 8938 applies. Please note FBAR and Form 8938 are not the same. Do not assume that filing an FBAR means you are done. FBAR and Form 8938 are separate reporting systems with different rules, different filing locations, and different filing thresholds. Reporting Area 3, Income Tax Treatment. This is where superannuation becomes more complicated. For Australian tax purposes, contributions, fund earnings, and retirement withdrawals may have their own concessional treatment, but US tax treatment may be different. A US person may need to consider how employer contributions are treated, whether fund earnings are currently taxable, how distributions are reported, and whether the Australia-US tax treaty affects the result. This is not a one-size-fits-all answer. The treatment may depend on the type of fund, the level of control, whether it is employer-sponsored, whether it is a self-managed super fund, and the taxpayer's broader facts. Reporting Area 4, Foreign Trust Questions. This is one of the most sensitive areas. The IRS says Form 3520 is used by US persons to report certain transactions with foreign trust and ownership of foreign trust. Form 3520A is generally connected with annual information reporting for certain foreign trusts with US owners. Some foreign retirement arrangements may qualify for relief from Forms 3520 and 3520A under IRS guidance, but you should not assume every Australian super arrangement qualifies automatically. In practice, a standard employer or industry fund may be analyzed differently from a self-managed super fund because an SMSF can involve more control, related party decision-making, and investment choices. The takeaway is not that every super fund requires Form 3520 or 3520A. The takeaway is that you need to identify the type of super fund and analyze the reporting position properly. Reporting Area 5, PFIC and investment issues. Some superannuation accounts hold pooled investments, managed funds, foreign ETFs, or other investment products. For U.S. tax purposes, foreign pooled investments may raise PFIC questions. PFIC stands for Passive Foreign Investment Company, and it can create complex reporting and tax outcomes in your U.S. tax return. This is another reason superannuation should not be treated as a simple checkbox. The structure and underlying investments may matter. Here are common mistakes U.S. citizens in Australia make with superannuation. First, ignoring super because it is just retirement. Second, filing FBAR for bank accounts but leaving out super fund without reviewing it. Third, assuming FBAR and Form 8938 are the same thing. Fourth, treating an SMSF like a normal employer super fund. Fifth, assuming Australian tax-free retirement treatment automatically means tax-free under US rules. And six, trying to catch up late US filing without reviewing Superfund properly across all years. So, before filing your US return, review the type of Superfund, the year-end and highest balances, contributions, earnings, withdrawals, rollovers, SMSF control, underlying investments, foreign bank account reporting position, Form 8938 requirement, foreign trust reporting, and prior year filing history. The main key takeaway is this. If you are a US citizen or green card holder living in Australia, do not ignore your superannuation. It may affect your FBAR reporting, Form 8938, your income tax position, foreign trust analysis, PFIC exposure, and prior year compliance history. So, if you have superannuation, especially an SMSF, foreign accounts, investments, business entities, or prior year non-filing issues, get advice before filing.